GWSCPE model. So right now we look at how it is when we are sure of what we want to do. Now we have the entry already placed again at the level where we expect to see high volatility, and right now a new candle just opened, and this is a candle looking very dogged and ready to break once again the trend impulse projection arrow. Others have tried. These were quadruple or quintuple attempts to break or failed, and yet because we already have the structure formed for a BPO entry formation, we see that all pressure is tilting downwards. Now we have placed our entry using the WSCPE model, which anticipates the market returning into trend by a double of the total move of the current correction impulse. So, and still, because we had the impulse break at the created impulse, correction impulse high formed at 3230, it means that we have 580 pips move all the way to expect downward, and 580 pips move from the impulse high here at 3230, let's say approximately 600 pips move, that's 60x move. That will take us down to 3170.27. So right now the market is struggling to make that major move, and we see what the current entry held is giving us. So far we have been making consistent profit all day, and the total profit made so far in one day, showing you how consistently profitable the GWSCP model can be, is 2,339. So as long as we continue to trade in this way, we will continue to see our capital growing, and we continue to have our capital protected with the GWSCPE model. At whichever point we decide to take our exit from the market, we are only going to make profit. So now we took our entry only from the entry zone, where you can see several attempts, okay? Several attempts, which shows high volatility. And you see the momentum the market is gaining right now. It is gaining this momentum all because it is able to pierce effectively the projection arrow, entry projection arrow, okay, of the previous trend impulse. No new trend impulse has formed. This was the last major trend impulse. This is the first correction impulse formed, and we are looking at the formation of the first okay, minor trend impulse. So if the minor trend impulse is going to form, that is when we'll be expecting that we are going to see a potential trend change. So but for now, we only have the BPO structure formed, and the BPO structure is indicating that we'll see trend continuation no matter how volatile the market is. So we can just allow this trade to run, okay, because at the point where the market is right now, the trade has to run into the trend projection we have. So, and this is a reversal trading. Now this rejection, because this is what we are looking at here as the circle limit, you can see this rejection you are seeing here is based on the circle limit rejected here, showing you that the market always respects levels, okay, and these are secret levels. And at the same time too, we have not seen a contrary structure upon which we will start trading anything other than what we are already trading. So we are going to watch this as it plays out, and we are going to leave this trade to run for the next 600 pips down. So we'll be giving you final feedback when that finally happens. So far we have traded this level over 5 times. 5 different times we've traded this level. So at this point we are trading upward. Then when the market went upward to retest the level here, we were selling downward. So while using the GWSCPE model, so that is what we have been trading so far. And you see how we do not panic no matter what we see the market doing, because we know that this is where the market is very volatile. You want to see how volatile this is, we'll go to our entry order point. You see, that's how you see a volatile market is restless. It always swinging between levels with high speed. You see that that's what is called volatility. Okay, so this high speed is what favors the entry levels we choose. Okay, so the market is not sitting at any entry level, and you see this volatility mainly during key hours. Okay, a start of a new hour. Okay, or the closing of every 15 minutes time frame candle. Okay, so that is when you see this high volatility. Then you see the power move or momentous move each time a level is broken. So right now there is a potential break of the projection arrow of the uh, previous major trend impulse. So this potential break is giving this market this high volume, okay, of interest in buying and selling. So right now we are on the projection of a reversal, while the market has rejected this several times, and this is the first major push down. But if you look at the structure of the push down happening, there have been consistent lowered level set, okay, before any rejection, and then all other rejections have been moving back upward. Okay, moving back upward. So this is looking like trying to repeat what the others did here. However, our entry is based on whenever we see a return back to the buy entry for GWSCPE model, which is at 3222.59. That's where we are looking at buying. So as far as the market stays below our sell entries, we are only waiting to see the market decide finally to make the move. So because of the long life of this candle, it is taking its time to play around this zone to show that there is high volatility here. And we are interested in volatility because this is how we make money. This is how we've made so far the profit we've made today. All if you look at the entries, take them one after the other, you see how consistent and profitable we are. Wherever you see closing on red, it's always smaller, and you see wherever we close in profit is always bigger. That is what it means. So you can never equate the accepted loss and the profit that comes with it. There is always a big gap between the loss and the gain. So just look at them, look at the results so far. You can compare the gain and the loss, and this is how we recover all of the losses. So here we have exceeded the limit or target for the day. Okay, we have exceeded the target for the day. We are only trading for demonstration purpose to show you how consistent the market can be. So right now the market has gone above our entry level for the buy. So let's take that entry level. Okay, so this is, we are taking the entry level 3-4. Then we'll go back to the sell 6-4. So we see the market back at 3222.68. We take the sell back down. So that is the market here. So now we have completed that circle. So the next circle we are going to be looking at is to repeat our entries. Okay, we're going to repeat our entry starting from 1. Since our projection is for a sell, we can hold this for as long as possible. However, if we see the market delay further, okay, we are going to be repeating our entry starting from 0.01, and that is when the market returns back up. So we'll hold this structure already. We will not be tampering with the structure. We will not be adding position to the structure. The reason for that is we always do not want to exceed, okay, the risk plan we have for it, which is for capital protection. We only want to maintain the highest lot size for the entries we have. Since we have a 4K account here, we are holding a maximum, you can see here, of margin 1708. That's what we are holding a maximum of. Okay, so now we have that. Whatever the market is doing next, we are not bothered about that because we have done our projection already. And for now that there is yet no minor, okay, there is yet no minor trend low formed. We only have also no minor trend impulse formed. We know that the market will have to form a minor trend impulse if you decide to return into the if you decide to change trend. It has to first of all form a minor trend impulse, which has not formed there. So far we have been seeing major trend impulse. This was the last minor trend impulse formed here, and you see that the market did not do the correction that was expected of it, showing that the trend was still strong and it came down but has not reached 3200 yet. So all adding up to the fact that the market has to come back down to 3200. So like we said, whenever the market wants to make a big move, it's first of all struggles or delays, okay, to hide the opportunity from traders, and that was what happened here. So the market formed this BPO structure. You can see the BPO structure here, but yet while it was expected that the market should move downward, it spent more than 5 hours around here to make sure that traders who are not aware of the opportunity for the BPO structure will think otherwise, all right, and lose that opportunity or be wearied out. So that is what the market always does when it wants to make a big move. So you cannot compare the moves here with what is happening right now. So there is still enough time for the market to play around traders' emotions here. So and this is why traders lose money even when they had the correct projection initially. They end up losing money because they do not know how to hold a position and wait for the market to confirm their entry bias. All right. So right now we have already anticipated the move, and we are not bothered about all of this struggle around this. You see the rejection happening around this projection arrow. This is what is normal for the market. Okay, so as the market is deviating right now, we are looking at the market returning to around this zone for us to repeat our entries here. So these are where the market is going to have high volume. Okay, and here it has come to the correction impulse 3. Let's look at that correction impulse, what? CROL. Okay, this is also where we have been taking all our entries from going downward. So right now we want to allow the market to make up to 50 pips move from our last entry. So 322, that's 50 pips to 327. So this is where we have to take our entries again to back up what we had done before. So 3227.60. Once again, 3227.60 will be taken starting with a sell from that point, and then start repeating all we've done before. So now when we have the entries added up that way, it will allow us to have multiple layers of the same projection. Okay, now since we are not closing any one, it means that we are not going to run out of margin. Okay, but if we were increasing our lot size, then we'll run out of margin, which is where the risk of hedging without a good plan, like the GWS CPE model, comes in. Okay, so without a good plan, hedging is very much risky because it makes you not to have a proper exit plan. Okay, but with the GWSCPE model, we have a maximum loss size we want to use. Then we'll start repeating again the structure on another layer, depending on how long the market has moved away from our re-entry level. So whichever direction the market moves, we just want to know that we are doing the right thing when the market is deviating from our projection. Okay, we don't want to be put under tension where we use more than the maximum lot size permitted from the account size we are trading. So whenever we exceed our maximum lot size, which in this case is 0.64, 0.64 should be in the trend direction. So we want to keep our projections always focus on the trend direction. Okay, so our largest lot size should go into the trend direction we are trading. So as far as the market has not given us that last entry at 0.64, we can always keep waiting and repeating the entries until we get it last at that uh, trend direction entry 0.64. So once we have it at a trend direction, when the market further deviates from trend to delay, okay, which would have created a panic, we now reverse our entries, return back to the threshold, starting from the lowest lot size again, and almost as though we don't have an entry held. That way, we are not concerned about what happens in the market when it delays. Okay, we only know that after the delay, the market will begin the move. Okay, back into trend. So you see here, 3227 was where we wanted to repeat our entries. You see, the market did not waste time around that area. That is what a key level where high volatility is expected looks like. So we just demonstrated that. You see, the market went to 3227 and then started coming back down to sell, which means that we haven't understood the structure. Okay, we did not need to over labor our trend entry projection. We had to wait to repeat, and at this point we waited, okay, for the market to get to 3227, and we wanted to see that it would do that move, but it did not do that move. It didn't stay there, okay. So we were 100% confident in our projection that the market was going to come back down. And here you see the market coming back down. You see our entries are already piling up profit because we are in the trend direction. We have our highest loss size in the trend direction. Okay. Even if the market slows once again, delays, or goes back to do what it has been doing, we decide. We decide either to keep holding or to take profit. Okay. If we hold this down, it's going to give us the most amount of profit possible. If we close this, we are going to accept the current profit and then start once again at the next key level. So let's look at the next key level right here. This is the next key level because this is a 3 CNI for a correction impulse, okay? And if we had drawn this correction impulse, let's look at what it would have looked like. So let's draw the correction impulse projection from 3219, okay, 0.17. Let's draw it. Okay. Let's look at that, 3219.17. This is it. 3229.17. That will be the circle limit. 3229.17. So 6436 to keep it equal. So now we are doing our projection for the correction impulse to see where its projection arrow has been reacted to by price. Okay, so this is circle limits. So now we have that defined. The next thing we are going to do is to connect the 3 CNI to the arrowhead of the projection of the circle limit. So let's look at that. This is our 3 CNI. We label it again. So we know that this is projection arrow for a correction impulse. So correction impulse, full circle limit, entry projection. That's what we tag the projection arrow as. Then the time frame to the time frame of analysis or observation. So right now we have done that. Let's look at again. This is like a cross. You can see that. So this major break here is definitely going to give us high power move, okay, to the direction of the break when it happens, because two things are breaking here. First of all, we are seeing the trend impulse projection arrow breaking, and then we are seeing the correction impulse projection arrow breaking. This is a point of confluence. If this break happens, then the move we are waiting for is going to be a power move, okay, and that power move is going to take us all the way down, like we have mentioned, because of this BPO structure here. 500 pips first of all, okay. So we'll calculate 500 pips down first of all. That will give us all the way to 3170. That is why we are holding all of this, because we want to see the market come all the way down to 3170. So this is how the GWSCPE model is used when we are sure of what we are doing. We have, first of all, to know our strategy. Strategy will make us to do the analysis we have to do, so we don't ignore analysis, okay. That is why we analyze and wait. So after analyzing, then we look for our entries, okay. So we have an entry model that we use, and then we have capital protection in mind when we take those entries, and that is what has given us all of these entries. Notice that if we took our profit here, we'll be making good profit. At any point to take profit when the market is in trend, as far as it has exceeded 30 pips, okay. Let's look at this, 3221 to 3218. That's 30 pips, would have been in profit. You can see that. So from 30 pips down, we are already in profit. However, this is let's look at that. From where we've taken this entry, this is a 500 pips move. So what is the difference between 30 and 500 pips? If at 30, we're already seeing about 70, okay, dollars. It means that going 60 pips, that will be times 6. That's going to be $420 in profit. We are adding to what we already have here. Our profit for the day is already 2339. So if we add what we'll be making next, that will give us more than $3,000 profit in one day. This is made possible by using the CCN CyberCorp's loss recovery 10x hyperloop. We have used it with our GWSCPE model. try it and see results.